Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's little program, I want to discuss a little bit about whether or not reality is setting in for the markets following last night's FOMC minutes. Plus, a couple of other things which are happening today, which could be key, certainly for the likes of the euro. But before we get into this, or get into that even, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Now, those of you who were kind enough to join me last night when I did a live broadcast of the FOMC minutes, we went through it together. And today, obviously, when it's a report, it's not like a number or data. So it does take a little while to digest this report because it's a 12-page document, okay? And like I said, I want to ask the question whether or not the reality of what the Fed's going to do is actually set in to the mind of the market, because now after I think the market has digested this the minutes last night, they are finding that the minutes sort of show that is showing, or did show, that the Fed is both dovish and hawkish at the same time. Now here's a couple of things they said. Okay, and then we'll talk about it and how the market is looking at it, okay? They said, first of all, potential risk of tightening as in increasing interest rates and the effect it may have on the economy is necessary. So in other words, they are going to carry on raising rates. The other thing they said, there's little evidence that inflation pressure is easing, okay? So, yeah, and they're saying that they haven't, they're not on top of inflation yet. They also said, and this was the one thing which is slightly dovish, which did give the markets initially a bit of a boost. They did say a slowdown in the pace of hikes. So at some point, now don't forget, the last two decisions have both been 75 basic points. Okay, now which is the most aggressive they've been since 2014, I think it is. Now there is sort of like the market's looking at this and thinking, okay, so. We might not get 75, we might get 50 or maybe 25, but they said at some point they're going to start to slow down. Okay, so that's quite dovish. That's not too bad. However, the Fed also said in the minutes, it is likely it would be appropriate to maintain the level for some time to ensure inflation was firmly on a path back to 2%. What do they mean by that? Basically, what they mean by that is though they might slow down the pace of interest rates, they are not going to stop. They are not going to stop. And they're not, more importantly, going to do any cuts in 2023. So basically, the reality is the market was hoping, for one, they're going to slow down the pace of the hikes, but they're not going to stop until they got inflation down to 2%. So the market was sort of hoping that for one, they may stop completely, and they may start doing cuts next year. But the reality is the Fed's not going to do that until they got to their 2% target. So this is why I'm asking the question, has the markets woken up to reality? So we have to be seeing a fairly bullish run on the market, and we have seen weak dollar over the last week or so. We've seen the dollar coming back now. We start seeing the dollar coming back from Friday onwards. This is just basically underlined it. So I think that's it. The reality is kicked in. I mean, the optimism started from that US CPI coming in lower than expected, but that optimism is slowly beginning to wane as the reality the Fed will carry on till they hit the 2% target is reached. Now, here's the other thing. Now, the next big event is the Jackson Hole Symposium, which starts on the 26th next week. That is going to be key because that's when all the Fed members get together in a big conference and they do speeches and they drop hints about how they feel about the current economic situation. Okay, so that potentially could be a massive mover for the market. So we'll talk a bit more about that next week. But anyway, let's have a quick look, see how the markets stand at the moment. Okay, here we are. So like I said, yesterday, when we were reading the report, there was a teeny weeny bit of optimism because it was a little bit dovish. But now when people have dissected it more, they say it's dovish and hawkish. And we have seen the dollar has gained a little bit of strength. The euro is currently trading at 1.01700. If you look at it on a daily, we can then see, like I say, it's still stuck on between those two key levels, 10284, and the potential area of interest for support, 1.00716. And it does remain under the 100, 250-day moving average, indicating that an uptrend on the euro has not potentially started yet. We look at the cable, British pound dollar as well. Again, it got a bit of a boost. Yesterday, initially. But then, again, it's come under pressure. And it actually has bounced off that key area of 1020034. But like I say, if you look again on a longer, bigger picture, again, it's under the 100, 250-day moving average, still trading just above that key level, 1.20034, with a key potential area of interest as a resistance, 1.21976. If you look at gold as well, gold is a similar story. Okay, still way under that key level of $1,791, currently trading at $1,763. Again, we've got dollar strength against that as well. So yeah, so that's sort of like the question I want to ask. I think reality is finally beginning to sink in. But what else we got going on today? We got a key event for Europe today. And that is the European Central EU CPI, which is expected in just under an hour's time, 9 a.m. UTC. Now, don't forget, okay, it's created 8.6. So the expectation is we're going to get a new record high. Expectation for is it to come in at 8.9%. Like I say, currently it was registered at 8.6. So 8.9 will be a new record high. And don't forget, after UK's shocking CPI yesterday at 10.1, nothing surprises me anymore. Now, like I say, this could be a potential big mover for the euro because unlike the Fed, and unlike, let's say, the RBA and, say, Bank of England, the ECB has been taking the scenic route with interest rates. They're taking their time with it. So like I say, if we do get higher than expected number, initially we could see a potential boost for the euro. But then again, as the market digests it and says, well, the ECB is not going to be that aggressive, we could see as then a reverse. So this is going to be key information to watch today. Other information coming out, of course, US initial claims due at 12:30 p.m. UTC. I know I talk about this a lot because I do think it's an early warning indicator of how the state of the economy is. Expectation is for it to come in at 265,000 new claims. The previous number was 262. So that's what rounds up the week with just the UK retail sales to come tomorrow. As the market stands, FTSE is currently down negative 0.40%. DAX currently trading slightly higher, 0.45%. And Euro Stoxx 50 currently trading at negative 0.28%. So yeah, there we have it. What do you guys think? Do you think the reality of what the Fed said yesterday in their minutes is setting in? It was slightly dovish, it was slightly hawkish. Or do you think, like I say, we're going to start seeing a continuation of this bear rally? What do you reckon? Share your views. Well, ask me any questions if you like. This is a live broadcast, after all, and live does mean live. But anyway, if you think of a question later, obviously, put it in the comment section below, either on YouTube and Facebook. I will see it and I will reply to it next time I go on live. So don't forget that option too. Okie doke. Oh, a lot of uncertainty. Yes, there is a lot of uncertainty. Hello, Pavlo. Nice to meet you, my friend. Regarding risky assets. Well, obviously, yeah, you're absolutely right, my friend. There is so much uncertainty. Obviously, when there is uncertainty, the market moves its money into safe havens, such as the dollar or the yen or the Swiss franc. So this is what we're seeing slightly at the moment. There was a little bit of hope last week, but now I think the uncertainty and the reality of the picture is coming in. Don't forget, US retail sales was terrible like yesterday, came at 0%. So there is uncertainty being driven by that as well. But it's a very, very valid point. Very valid point. Hello, Pavlo. Nice to meet you, by the way. Thank you. Anything else? Any other questions? Anybody else like to add anything else? Okay. Not a problem. Not a problem. Big shout out to Pavlo. Thank you very much for talking to me. I do like it when people chat because it is a live broadcast, so it's nice. So thank you for that. Really appreciate it. But anyway, don't forget, if you're watching me on Facebook and you like this little episode, give us a follow by all means. If you're watching me on YouTube and you enjoyed this little video, found it useful, subscribe if you like. If you enjoyed this video and you've put up with me, my over-the-top enthusiasm for the markets, which I just can't help because I love the markets, give us a like. It's nice to know that you like what I do, and I've got a like already, which I really appreciate. But anyway, big shout out to Pavlo. Thank you for that. And a big shout out to all of you. Thank you so much for coming along to watch me. I really do appreciate it. But anyway, don't forget, I'm back online again later today at 2 p.m. UTC, so please come along and join me for that. But till then, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.